Well, September tends to be the worst performing month for stocks, with the S&P 500 typically ending the month with a loss of about 0.7%. For more on how investors can navigate this period, Ken Mahoney is joining us, Mahoney Asset Management CEO. Ken, good to see you. So we tend to see September as negative. We're certainly starting off in that direction here. So do you think that that we are going to see sort of a typical September here? Are there some pressures on stocks this month?
There is. Julie, feels like the perfect storm since Friday. So, we had calm volatility index, then Friday night was a blow to the tariffs. Over the weekend, we saw China, Russia, India get together, trade partners. That's not a good look. And we are coming in, flip the page, first trading day, September, where we find the volatility index up, 18, 19%, trading around 19. So definitely those calm waters we had in July and August have now given way to a lot of things, as you mentioned, unemployment report on Friday. Then we have the PPI, the CPI, and the Fed meeting. So we have a lot going in September, and it's going to live up to its lane. I mean, this is a tough start. I think you said earlier, the last 5 years, the S&P 500 was lower by 4%. So we're down 2% already. Maybe we're halfway there, and it's the first trading day of the year.
Yeah, I guess over the longer term, the declines are less, but the last 5 years in particular, indeed, have been tough in September for the S&P 500. So given all of that, we've seen, for example, a bid in gold this morning, Ken. I wonder if this is a time for investors to get more defensive here, or do you think it's just going to be sort of a short-term hiccup?
I like to think it's a short-term hiccup. Look, these are pretty big headlines to digest all in one. It's like the perfect storm, right? Hit it three different sides, the George Clooney movie. And, but yeah, again, we'd like to buy the best, like NVIDIA on the pullback, Microsoft on the pullback, Apple on the pullback, the big, hyperscalers. And I still think AI spend and the hyperscalers and what they're spending will still be the excitement around the market. So definitely we're dealing with some geopolitical issues right now at our doorstep here in September to start the month of September. But there's still great opportunity. I think we're still in the third or fourth inning of this kind of great spend. But again, it's going to be tested, of course, in the coming weeks with this being September.
Ken, what about the Fed meeting that we are awaiting in September? There is a very high percentage chance being priced into markets, at least right now, that there will be a rate cut at that meeting. What is that going to mean for markets if indeed it does happen?
Right. So it's usually a campaign. It's not just one and done. They'll eventually maybe cut again in October, November. I mean, there are some economists kind of, Julie, really shaking their head and say, wait a second, we just came off a revision of GDP, 3.3% last week. The Atlanta Fed is really good at predicting. They have this quarter that we're in right now around 3.5%, and they're cutting rates. But it's really difficult, for the Fed. They've been kind of like deer in the headlights. This is difficult. I mean, you have a dual mandate that says inflation and a jobs market. And I think they're paying a lot more attention now to the jobs market after the hideous number we had last month, which showed job creation a lot less than expected, revisions from May and June, and here we are. So with the Fed in the deer lights, now they're saying, no, I think we'll take this side of the ship because if this really gets unraveled, that's a harder place to kind of dig out from. So I think the Fed's making the right decision, but most economists will sit back and say, wait a second, we're running a 3.5% GDP. Why are we rushing to Fed cuts? But here we are.
Well, and we're going to talk to some people later on in the show who are suggesting that maybe the tariff inflation is still coming, right? That we're seeing small signs of it now, and that it will show up more later. Then again, you have now renewed tariff uncertainty because of these various court rulings. So we keep waiting for the environment to sort of get more certain, but I guess we should give up on that.
Too many cross. Yeah. And that's why sometimes we come back to the AI. Like, what's exciting? Where's the risk on? Now today, everything is risk off, including NVIDIA. But if you think about the AI being, let's say, Monopoly board, right? And the Park Place and Boardwalk are your NVIDIA and Microsoft. That gets kind of exciting. I mean, again, there are the picks and shovels, much like the Monopoly board game, the picks and shovels. So there's still, when we get these pullbacks, this market's gonna be more about tactical, probably between now and the end of the year. A tactical meaning, putting a bid below the market, good to cancel. Hopefully you get filled. Keep your core position, but you could trade around it. These opportunities that come up because of some of the geopolitical concerns are popping up. But if you really do think of this as the AI monopoly board, and you want the picks and shovels, you should be looking at Microsoft and NVIDIA, even though we have to deal with a lot of these headline risks that's happening at the same time.
Right, but those two have been winners this year. So
Winners.
yes, exactly. Ken, good to see you. Thank you.
Good to see you as well.